I'm not actually sure the tech matters an enormous amount on a 12 to 18 month time horizon here. I think Solana is probably good enough for the time being. Big Web2 giants adopting stablecoins in a big way, that's going to end up moving the needle an enormous amount. So some of it comes down to tech, but my sense is it's probably actually more of a BD and marketing game.
I'm pretty bearish these corporate chains. We've seen this movie before. Y'all have been around. You've seen this. You've seen this in the last cycle and the cycle before that. Remember Hyperledger? Like that was a thing, right? Like
R3.
Right? Like we have seen this and people get excited. They're like, oh, look, big trusted company. We love these guys. They're going to be incredibly neutral and like we can trust them. Let's just put all of our trust in them. And then no, that doesn't work out because you know what? Adyen is not going to build on Stripe's chain and MasterCard is not going to build on Visa's chain. And if you think Goldman is going to settle their trades on a chain controlled by JP Morgan, then I don't think you understand how competitive these organizations are.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Thanks for joining this live stream. Before we get started, a quick reminder, nothing you hear on Unchained is investment advice. This show is for informational and entertainment purposes only, and my guests and I may hold assets discussed in the show. For more disclosures, visit unchainedcrypto.com.
The Energy Network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. Energy Dollar is the native token of the network from one of Europe's fastest growing energy startups. Follow at Fuse Energy on X to find out more. Multichain Advisors is an emerging technology growth firm that has helped create $50+ billion in enterprise value for 80+ clients over the past 4 years. They're the partner to help navigate markets. Build real traction today at multichainadv.com.
Quick note before we get into today's episode. Bits and Bips now has its dedicated feed. We're spinning off from the Unchained feed and moving to a new podcast and YouTube channel. So if you want to keep up with our weekly live streams and macro meets, crypto breakdowns, make sure to subscribe to Bits and Bips directly. We won't publish there until March, but subscribe today so you can be ready for launch. Be sure to subscribe to the new feeds at unchainedcrypto.com/bitsandbips. Today's topic is where Solana and Sol go from here. Here to discuss are Tushar Jain, co-founder and managing partner at Multicoin Capital, and Mike Ippolito, co-founder at Blockworks. Welcome, Tushar and Mike.
Hey, Laura. Thanks for having me.
So currently, Sol is trading at around $89, and the last time it was at this price was kind of, late 2023. So that was kind of just as the meme coin craze was about to hit its frenzy. It's down about 60% or so since October 9th, before 1010. In comparison, we're seeing Ethereum down about 55%, Bitcoin down about 46%. Although actually, I wrote these percentages a few hours ago, so hopefully it hasn't changed too much. But I was wondering, you're looking, obviously, I'm sure, at all these developments in the market. We're sort of at this uncertain time, perhaps the beginning of a bear market. What are the main metrics, factors, developments that you're watching to see how you think Solana will fare this year? And Tushar, why don't we start with you?
Yeah, absolutely. So I think there's a handful of things to pay attention to. There are backwards-looking metrics that everyone focuses on, but we really like to think about future-looking metrics and think about what's going to change in the future. And I think the number one thing to think about with regards to Solana this year is the technical roadmap. I think understanding what application-controlled execution enables, the scalability upgrades that Alpenglow enables, and the decentralization of the network improving as you have more Firedancer adoption. You're seeing competition at the block building layer. I think the chain from a technology perspective is firing on all cylinders and is by far the most advanced and best in terms of a community and a truly decentralized effort. And at its core, that's what the chain needs to do. That's what it is it's a platform to then allow developers to build on top of, to allow issuers to go and issue assets on top of. And we're seeing that too. We continue to see a lot of development enthusiasm around SVM. And we continue to see asset issuance from, like such as private credit folks or some of these new experiments around tokenized equity. And you saw Galaxy, you saw, like that's actual equity. It's not a receipt. Though you have seen some of those receipts like the Kraken X stocks and stuff too. So you're seeing issuers excited. You're seeing the technology continue to progress. And I just think using the market price as an indicator of fundamentals is a bad heuristic. You have to really look under the hood in order to understand where things are and where they're going.
And Mike, what about you?
Yeah, I think I'm sure we're going to get into talking about the technical roadmap and what's happening underneath the hood with Solana. One piece of meta commentary that I would give is I think a rising tide that's going to benefit actually both Ethereum and Solana is the raising barriers to entry for new developer platforms in crypto. So I think over the course of the last 5 or so years, one of the hottest trades has been new L1s and L2s. And if you look at today, where there's actual organic demand, it's really happening on Ethereum main chain, Solana, and in some cases Hyperliquid, right? That's where there's kind of organic takeoff at the moment. And I think part of the reason for that is it's just very, very difficult to build one of those ecosystems. It's also very difficult to do it from the perspective of being neutral, which is one thing that I think both Ethereum and Solana have going for it. They're very unique kind of go-to-markets, as opposed to something which is Hyperliquid successfully counterpositioned Ethereum, I think, this year, but they did it by being very opinionated and more controlled. They look more like a company to me than a platform in their current form. I think also, just from a branding standpoint, what Solana has established that's very difficult is, I think this is probably the year where we stop talking about chains as being truly general purpose. When I kind of see a divergence here in between Ethereum and Solana, which allows both of them to win and be successful. When I look at what's happening on Ethereum, it's a lot of, I kind of think of it as borrow, lend, money market on chain. For lack of a better word, there's a lot of really interesting activity going on with vaults and Morpho and bringing asset management on chain. But when I look at Solana, I look at it as a neutral platform to internalize trades and kind of a consumer app ecosystem. And a couple of data points that I would point you to that I think are pretty interesting in this direction is some of the applications that Solana has recently won away from competitors like Base, who have, Base has done a lot to both kind of spend money, but also attract new application platforms that Solana seems to be winning here in an organic way. So yeah, I agree with Tushar on the price point. I don't think you can just look at price and infer the potential of an ecosystem. And I think there's a lot of strong things still going for Solana right now.
Yeah, it's funny because actually my next question was going to be about what kind of narrative you think Solana should, push. Because I agree that it's sort of like this competition we're seeing where, for a long time it had been Ethereum and Solana, and then now Hyperliquid is sort of coming in and again competing. It's funny, in my head it's like with Solana, but I guess it could also be with Ethereum in a way. But it sort of feels like Solana is just in this moment where it's kind of facing competition in various ways. And, I've seen your tweets, Mike. This is why I thought of you for this show. Because as everybody knows, Blockworks has a reputation for potentially being maybe a bit more pro-Solana than other chains or Ethereum. However, recently you have tweeted multiple times that Ethereum looks very good to you here right now. And, it's things like, their quantum roadmap, they just doubled down on DeFi. They're, no longer following the L2 centric roadmap. I mean, there's just multiple reasons why it sort of looks like Vitalik maybe heard what the community wanted and is actually responding to it. So, given those changes and kind of the increased competitiveness perhaps from Ethereum, I'd be curious to hear you guys talk a little bit about like what you think the main narrative is that Solana should be pitching. And obviously we've heard about internet capital markets for a while, and there's a number of different narratives that they have been pushing, but I don't know if there's something to respond to the changing competitive landscape that you think they should emphasize or focus on.
Well, just to respond, so first of all, Blockworks is very pro Ethereum. I know that that's our reputation, but very pro ETH. I think this is just speaking for Mike, not speaking for Blockworks. The way that I've felt over the course of the last 3 or 4 years with Ethereum, maybe a point of frustration where a lot of the messaging that was getting pushed out didn't make a lot of sense to me. I've always been one of these people that thinks I'm not a big everything's a meme kind of guy. I think generally when you think about an asset and why you want to hold it, I think most assets in the world are fee-based, and if they're commodity-based, they probably, like most commodities, end up trading sideways. So I've always been a big proponent of Ethereum having this very early head start, very trusted brand, a head start and critical mass around really interesting use cases like stable coins and decentralized finance. And I've always been a big proponent of being a little bit more pragmatic on scaling main chain, and trying to just generate fees instead of giving up from the go, right from the off. And I think one way of looking at what's happened with Ethereum over the course of the last couple of years is, just my opinion, I think we had a lot of the wrong ideas, but I think that the market has corrected those. I think a lot of activity, I can see recentralizing is the wrong word, just regathering on one chain. And it's a really exciting, large use case. We haven't really talked about Genius. I'm sure you guys all saw the Meta news that they're going to be launching another stablecoin. And I kind of think that's where a lot of the interest in the activity is going to go. So that's what's making me more positive on just Ethereum and ETH. In terms of what Ethereum doesn't have is it's certainly never going to get to a level of scale and throughput that you could have like consistent trading activity happening there. So that's, to me, when I look at the unique value proposition that Solana has, is it's still neutral. We haven't talked about prop AMMs, but that was probably the most exciting innovation in market microstructure and moving price discovery on chain that at least I've seen in the last year or so. And so I know Tushar and Multicoin has been kind of all over this, but I like the internet capital markets positioning for Solana. And I think it can win a bunch of the trading and capital markets kind of issuance use cases that Ethereum can't support.
Tushar?
Yeah. So I'd love to chime in on that. I'll go in the same order that you did. I want to start with Ethereum is what got me excited about crypto in the first place. And I've told this story before, so I have a lot of love for Ethereum. And I think the ecosystem was very misguided for years and years with the L2 strategy. And it makes me really glad to see that the ecosystem has been able to self-correct. I wish it had happened sooner, because there was a lot of money spent on that strategy. A lot of developer energy and time was spent on that strategy, and it clearly has not worked. L2s don't deliver value back to the L1, and like now we just have incontrovertible proof of that. We're seeing that in the market. So I do find myself more enthusiastic about Ethereum now that they've moved off of the L2 strategy. However, there are still scalability challenges when it comes to Ethereum at L1. And those scalability challenges are so substantial that, barring some complete re-architecture of the system, I don't see how Ethereum L1 can be competitive for any sort of trading applications. And if it's not competitive for trading applications, I don't see how it can be competitive in the long run for borrow lend applications. Mike, you mentioned you see it as kind of the money market RLN chain, but one of the most important, if not the most important attribute of a money market is the ability to liquidate collateral in order to prevent bad debt and insolvency. And in order to do that, you need liquidity, you need trading volume on that chain so that you can liquidate that collateral at a reasonable price without incurring bad debt. So I think where you see the trading activity is where you will see the borrow lend markets start to migrate. And I think this is where Solana has a huge advantage. Solana has an advantage because it can support the trading activity, and it also is credibly neutral enough to support asset issuance. You can see some of the largest asset managers in the world issuing tokens on Solana. And so I think it's actually got kind of the best of both here. It's got the best of performance, but it also has the required credible neutrality to serve as the substrate for internet capital markets as a thesis. And I think that's playing out. We're seeing it. Like, if you just ignore price, Solana is in a better place today than it has ever been. We're seeing competition at every layer of the stack. We're seeing innovation in market microstructure with prop AMMs. We're seeing innovation on block building with Jito's BAM product, which allows applications to control the sequencing of transactions, such that it can allow things like makers to cancel orders before takers can take them. We are seeing innovation, with like dozens of different perpdex teams exploring different microstructures, and that design space is so large. I think it's impossible to sit here and say, "Oh, we've crowned the winner already. It's over." I think you need to be a place for permissionless innovation, and people will always surprise you with new innovation if you let them.
Yeah, I agree with you, and that's why in a moment we're going to get into all the tech developments. But just one commentary on the Base Ethereum thing. When Base announced that it was going to develop its own tech stack and get off OP, I just found my mind kind of playing things out a few steps ahead and feeling like, leaving aside the issue that, of course, Coinbase is a public company, it's very centralized, blah, blah, blah. Just like, wow, there's a potential world where Base itself becomes a huge competitor to Ethereum, especially now, you're seeing all this agentic activity on Base. And that's clearly what the next big thing is going to be, and, it's, I don't know, it's just like I think that alone, the fact that that thought even popped in my head shows, what you were saying about how the L2 roadmap was something that it just really didn't benefit Ethereum, the base layer. In my head though, there's random things like, I don't want to, go down random rabbit holes, but one other thing is that I could actually see some version of a modular setup working down the road, which hopefully, I don't know, maybe that's a controversial statement, but it's sort of like we're just at a moment in crypto where to be like a little bit more centralized or nimble or like not be as complex is going to be an advantage because, we're sort of like pre-mass adoption. But yeah, I don't know. I found myself thinking, well, who knows down the road. But anyway, I don't want to get sidetracked. Let's talk about this road to internet capital markets for Solana, because yes, as you guys mentioned, there's a lot of technical things in the works. I'm not a technical person, so I try to do my best. Hopefully we will cover at least all the main topics. But, in order to get there, there's a number of different advancements that the chain is working on. Tushar just alluded to a few of them. Some are really kind of minute about, how the blocks are being built, reducing transaction finality. As everybody knows, we did a show on 00. That's like, literally looking at physical infrastructure. But, before we dive into kind of each of the main points, so which ones are you most excited about, or which ones do you think will be like the ones that move the needle the most for Solana to, get to its goals?
Yeah, I'm happy to take a stab at this first, and then Mike, please add anything that I miss. Before I do answer that question, I do want to comment on the aside point that you had there. I think Base is a competitor to Ethereum. It's already a competitor, right? Like any transaction that happens on Base is by definition not happening on Ethereum, and that's market share. Like you want to own as much market share as possible. So I think that's already the case.
Yeah.
But I know we want to talk about, Solana and the technical roadmap. I'll tell you the things that I am most excited about on Solana. There's two key things that I'm most excited about, and then there are several other things that are also quite exciting. But the two things I'm most excited about are first Alpenglow, because Alpenglow reduces the time to finality. It dramatically increases chain performance. It is just such a simpler system for consensus than what Solana is currently operating. And it's just a step change improvement. The analogy that I would use here is the viewers might have seen the image of like the first engine that SpaceX used, and then like their V3 engine, which looks super slick and like you can't see any of the wires, and it's just like way simpler. That's Alpenglow, right? So like the original version is like turbine, proof of history, all of these components that had to stick together and make Solana function. And then Alpenglow is the far simpler, far more efficient system. The biggest benefit that regular users will see off of that is faster finality. They're going to see higher probability of transactions landing when they expect them to land. And I think they're going to see more throughput in the case that, they need to, the chain is actually at capacity. So I think Alpenglow is really exciting. A lot of the work on that has already been done. It's in, testing phases. I expect it to be live on mainnet this year. So I'm pretty excited about that. Second thing I'm really excited about is application controlled execution, or ACE. We actually published a blog post on this last week, talking about the design space for ACE and what this now enables that previously wasn't possible. And this kind of thing doesn't really exist anywhere else. I haven't seen it on Ethereum for sure. I haven't seen it in any other major system. Maybe there's some small niche thing. But what this enables is each application can control the order of transactions being executed within a block. So let me give you some concrete examples of what that means. This can mean that a borrow lend platform can prefer the liquidator who owns a bunch of that token. So for example, Camino, which is a leading borrow lend platform on Solana, can say, hey, if you buy and stake my token, you submit a liquidation transaction, yours will get processed first. But they can do this without damaging the protocol in any way, because if I have the most tokens staked and I don't submit that transaction, it's not like they're waiting for me. They can just allow the next guy to liquidate that transaction in that same exact block. Or another example of this is you see there's this concept of price time priority on all order books. And what that means is the order that will get traded against first is the order with the best price that was placed the longest time ago, that's been on the book for the longest. And I think that there's design to explore that too, where it can be, instead of price time priority, it can be price stake priority. Of course, if you have the best price, you get executed first. But if two orders have the same exact price, then you give the fill to the trader who has more stake. And that incentivizes stake collection. And you are able to do things like this with application controlled execution. That is live today on Solana through Jito's block assembly marketplace, so BAM product. So you can actually build on that today. And I expect that adoption to really continue. And that I'm just super excited about the design space exploration here. I think that this is going to be the next big market microstructure evolution. Solana already just did the Prop AMM evolution. And I think this is the next one that just like dramatically increases liquidity and usability.
Mike, what about you?
I was going to also, I think one of the things that Solana's always had going for it is a very clear North Star. I also have thoughts on the, I think I basically just think Ethereum overbuilt for demand. I do think long-term a modular roadmap actually makes some amount of sense to me. But I think one of the things that it always lacked that I did think was a very valid criticism, it doesn't have a North Star. And Solana's always had the IBRL North Star, I think, is exactly right for it. So I would echo what Tushar said on both things. I think maybe like one slightly controversial opinion that I would have here that I know doesn't always land super well, and we're a nerdy space that loves to get nerd sniped, but I'm not actually sure the tech matters an enormous amount on a 12 to 18 month time horizon here. I think Solana is probably good enough for the time being, and I think it's also doing this, right? I think the foundation is extremely focused on going out and getting like RWA asset issuers to come on chain. I don't have any special inside information, but that's what it seems like the priority is. And yeah, I think that there are going to be a couple of big fintechs or Tushar, I know this was a Multicoin prediction from many years ago, but yeah, like Metas or big Web2 giants adopting stablecoins in a big way. That's going to end up moving the needle an enormous amount. So some of it comes down to tech, but my sense is it's probably actually more of a BD and marketing game at this point.
Oh, wow.
I would tend to agree that BD and marketing absolutely matter. And especially in the short to medium term, a lot of wins are driven by BD and marketing. And I also agree that scalability is no longer the goal or the panacea that it used to be. And a lot of people who've been in the industry for a long time remember when that was the challenge. Chains would just get congested, and you couldn't plan transactions. That doesn't happen anymore. So I agree that direction of tech advancement is not going to be the game changer. However, I do think the direction of tech advancement in terms of market microstructure can be the game changer, because getting the right market microstructure improves your liquidity. There are returns to scale there. Everyone wants to trade at the place where there's more liquidity, and thereby increases the liquidity of that place. And that all comes down to market microstructure and understanding those fine details. And there, Solana is undeniably doing the most experiments and is in the lead with things like application controlled execution and what that design space now enables. So I think the scalability tech doesn't really matter so much, but the market microstructure stuff does matter.
Yeah. I had the same thought that I could just imagine builders listening to this and, thinking, oh, well, that gives me, the room to, execute this creative idea that I have for, whatever it is. So I think if you attract builders, then that's really where it's at. Mike, you were going to say something?
Well, I agree, but even just to back into the timeline on some of this stuff, and also I think the Solana has been pretty good at shipping on time, but everything in crypto always seems to take longer than we'd like. And Alpenglow is Q3 in a best case scenario, and then multiple concurrent proposers. That's another one we haven't mentioned, by the way. But MCP and ACE is another year probably after that. So I think this is also me partially saying, hey, let's make some incremental improvements while we can. And then what I think we're sometimes guilty of in crypto is waiting around for the tech to improve and saying we're on a roadmap and it's very far out. But I think we're in a moment in time here is my framing of this exact moment, which is I've been in crypto for 8 years. Heard a lot of times that the institutions are coming. I was there in 2018 when Mike Novogratz said we're 6 months away, and he said the herd is coming, and it just didn't. But they are coming this time. It's not that far out. We have Genius. While it got passed last year, it's going to get the earliest that it can actually be implemented, and there can be a real Genius stablecoin is in November of this year. That is very real, and you can already see big companies marshaling. And there's I think there's a moment in time. This is a moment in time where you really want to be dialed in on the right levers and absolutely improve the tech, do cool stuff. But I think that that's where I'd be directing my time and attention.
Yes. Oh, go ahead.
I was just going to say some of the stuff too, not to push back too sharp, but ACE is a pretty old, it's actually originated in Cosmos. There's also maybe a jaded, I heard this from the Cosmos people 4 years ago, and it made its way to some of the like the MEV microstructure on ETH a couple of years ago. Like there's probably a jaded, I'll believe this when I see it, type response that you might be picking up on too. Not to doubt any of the, builders sold, but I think that's maybe a little bit of where I'm coming from too.
It's so funny.
That's totally fair. And I would say, look, I think the Cosmos ecosystem had some of the best ideas.
They were so far ahead of their time.
They were just so far ahead of their time, but the execution just was not there.
Yeah.
So I learned a lot from that ecosystem, even though it clearly hasn't worked. On Ace, though, I would say it's live today with Jito BAM. Is live in production today. If you're a developer on Solana, you can use that today. So I know, the first party Ace stuff and MCP is a little ways away. But I think what's exciting is if you are a developer, you can start experimenting with Jito's BAM product right now. And you can get those benefits right now.
Yeah, it's so funny that you guys mentioned Cosmos because after Vitalik's post about the L2 centric roadmap, I tweeted something about how my takeaway was like, now Ethereum is Cosmos's vision or something like that. And so it's just funny that, it does appear they had a lot of good ideas. Okay, we need to get back to the tech stuff. I did want to mention, one long-term goal finally was reached. Firedancer went live on mainnet in December. At least as far as I can tell, right now it's only garnered about 1% of the network. Are you guys disappointed by that? Like, did you expect that it would gain more adoption early on? And obviously, at least to my mind, I don't think if it has 1% of the network that really gives, it adds much to Solana's resiliency. So yeah, I'm just curious to hear you, talk about, the fact that it's here, but it doesn't appear to be doing that much yet.
I think that these things just take time. I'm personally, in the client debate, I'm not really in the Ethereum camp of we need, 5 different execution clients and multiple consensus. But I do think at least having like 2 does breed for some resilience. It at least protects against the doomsday scenario of some sort of weird day zero bug. So, the tech behind Firedancer is really strong. I think it'll get more widely implemented, as the year goes on. But I'm not massively disappointed in the rollout so far.
I mean, one thing that I will say though is, it's not just a 0-day bug, but also, I wrote about the DDoS attacks on Ethereum back in the day. Clearly somebody, made a study and then one by one just, attacked Ethereum relentlessly for, I think it was like a month. So, that's not out of the realm of possibility as well. And some of the attacks were ones where, it really targeted one client and they really truly had to switch the network all over to be, to like if it was Geth, then, to parity and vice versa. So it is a thing. I'm not trying to give anybody ideas, but anyway, Tushar.
I agree with you, Laura. I'll actually take the view that I think Firedancer has been an enormous success. And I do not think you should measure the impact that Firedancer has had by just looking at how much stake is running Firedancer as its primary client on chain today. Because the benefits of Firedancer, in my opinion, are all the second order things that it has created. First, Firedancer created a sense of competition amongst core developers and has led to the Agave team just massively stepping up. The performance of the core chain really stepped up. And I think, what made that happen is competition. And the Agave dev team saw that everyone was excited about Firedancer and they said, we can do that. And they did. They stepped up and they built a way better client than they used to have. So that's the first second order effect that I think is meaningful. The second one that's meaningful is exactly what you're saying, Laura, about resiliency. It doesn't matter what is the primary validator client that people are running, the fact that they can switch over in the case of an attack to the other one is an enormous point of resiliency. And the other client is independently written. It's not like, Firedancer is some fork of the Agave client with some tweaks. No, they wrote it off again from scratch, right? And so the chances of a bug or an exploit existing in both of them is extremely low. And so just having that optionality of the fact that a large validator who's running Agave as their primary client can switch over in the case of an attack prevents network downtime and improves network resilience substantially. And then the third piece that I'll say where Firedancer has been an enormous success is in improving the credible neutrality of Solana as a blockchain. I think you do need at least 2 open source clients with competitive dev teams to be credibly neutral, because ultimately you need to have some accountability. You can't have one group who is in charge of anything and everything that all those technical decisions that then need to be made at a core protocol level. And now we have that. We have that meaningful level of decentralization. And I think that really matters. As a side point that's related to this, I'm pretty bearish these corporate chains. We've seen this movie before. Y'all have been around. You've seen this. You've seen this in the last cycle and the cycle before that. Remember Hyperledger? Like that was a thing, right? Like
our dream.
Right? Like we have seen this and people get excited. They're like, oh, look, big trusted company. We love these guys. They're going to be incredibly neutral and like we can trust them. Let's just put all of our trust in them. And then no, that doesn't work out, because you know what? Adyen is not going to build on Stripe's chain, and MasterCard is not going to build on Visa's chain. And if you think Goldman is going to settle their trades on a chain controlled by JP Morgan, then I don't think you understand how competitive these organizations are. Like that's not going to happen. The credible neutrality really matters. And I think that Firedancer delivered just a quantum leap in credible neutrality for the Solana ecosystem. And that might have been the most powerful thing that it did.
Yeah, I was just want to double down on that point. I think, the criticism that Ethereum has had of Solana about it not being centralized because of the price of validators, I've always thought was a really silly criticism, given the trust assumptions that you're making operating on an L2 and settling down to ETH. Like you're making probably worse trust assumptions there. But with they actually never really shouted about this, but I thought it was always a pretty valid point that the decentralization that's meaningful is who is deciding the direction of the protocol. And this was actually something that Solana probably had to get used to, I would imagine, right? It used to be kind of labs, and then Onza, broke out, and now there's the Firedancer team, and coming to consensus between different groups sometimes might actually take a little bit longer, but it's far more resilient. And I am ultimately a believer in the idea of credible neutrality. However you want to define that word. I think the idea is that if you're building on a platform like Solana or Ethereum, you aren't going to get rugged. And if you have multiple teams, it's just far more difficult to do that. So I just want to underline, I completely agree with especially Tushar, all of those points, but definitely the last one.
All right, so in a moment, we'll dive into a few more of the different tech developments that are coming up. But first, a quick word from the sponsors who make this show possible.
The world is about to see one of the largest infrastructure shifts of the century. New technologies are using more energy than ever before, but our legacy grids can't supply the demand, and we are barreling towards a global bottleneck. So Fuse is rebuilding it. The energy network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. The network harmonizes existing infrastructure, increases grid capacity, and unlocks low-cost, clean energy. Energy Dollar is the native token of the network. The more electricity the world needs, the higher the demand for the energy network. The value of energy dollars may fluctuate. From one of Europe's fastest-growing energy startups. Follow @Fuse Energy on X to find out more. Multichain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
Back to my conversation with Tushar and Mike. So as we mentioned earlier, the market right now is very focused on perps. The rise of Hyperliquid has definitely caught a lot of attention. You know, we're in this moment, where you alluded to earlier, Solana's kind of having these block building wars. Essentially, the way that I'm reading this, and feel free to correct me, is the upshot is that it kind of makes it difficult for the chain to compete with Hyperliquid a little bit. But, I'm sure you have more details on that. So, can one of you outline, what is going on here and what you think are the best ways for Solana to address this?
I mean, I can give like a little bit of a history here as well, which is, it's kind of funny to see, at least, so I guess the history, right, of MEV in general is Ethereum, because they got there first, and they really care about this idea of credible neutrality. They kind of flagged that, hey, this is this really difficult, thorny problem to solve in a permissionless environment where you don't know who the actors are. And they proposed this separation of duties in between the proposers, which they wanted to make very dumb and, have the requirements there be very low, with much more sophisticated builders that would build the blocks. There was a lot of compute and hardware and specialization that needed to go into mostly simulating. And you very quickly saw the structure there compress on really about at sometimes 2 or 3 really integrated searcher builders on the Ethereum ecosystem. And it's been a lot of like pros and cons and different approaches to that ecosystem. Solana's always been different in the sense that there wasn't a public mempool. So the benefit of that is you didn't have a lot of these same sandwiching type attacks that you did and that you saw in Ethereum. The challenge with it, though, is that there wasn't a way for you to deterministically include an order based on how much you're willing to pay. So there's an enormous amount of spam for the chain. Jito is one of my favorite teams in crypto. They were very early to this, and they essentially created like bundles in the same way that you had on Ethereum, and had kind of like a privatized mempool solution that eventually, to their credit, people started to submit sandwiches and they shut down. There are since 2 solutions. So Jito has BAM, which is basically this very sophisticated system processing way of dealing with MEV, whereas you have a more recent entrant here, which is Harmonic, which is a more kind of open competition, actually kind of Ethereum PBS style way of dealing with MEV. But ultimately, I think it's interesting to see differences, but I don't know, Tushar, if you've got insight on this as to why these markets tend to concentrate so strongly amongst a very small number of actors. But I think you're starting to see slightly similar approaches to MEV on Solana as you were on Ethereum. And I think that is ultimately kind of still a thorny challenge for Solana here to solve. I have no doubt that it will get solved between Harmonic and Jito's BAM solution, but it's definitely a little bit thorny, although I don't think it really prevents them from competing effectively with Hyperliquid. I don't know, Tushar, what do you think?
I agree with a lot of what you said. The thing that I come back to is I think competition is really good. I think competition drives people to perform better. And I am excited to see this competition at the block building layer in Solana. And what we have is, what used to be a single team that dominated it. Now there's multiple teams that are competing on how to best build blocks on Solana. And they're both moving extremely fast, doing experiments, and trying to figure out what the right trade-offs are. Because when you're operating at the efficient frontier of technology, there's never really this solution is just simply better than the other one. There's a trade-off. There's some cost that comes for that benefit. And having multiple teams explore that space of trade-offs, I think is extremely valuable.
But
I do think...
Wait, Tushar, I just need to ask, because one of the things, that I took away from what I read about this situation is it sort of feels like even though there's competition, which is generally good, what is happening on the network is that there's inconsistency in execution. So like, spreads, like routing, there's a number of factors that are effective. And so it means that, there's, first of all, maybe a certain level of unpredictability, but then also it means that it's not always optimally efficient. Are those like some of the downsides of that?
There are downsides, absolutely. However, having just one type of block building has its own downsides too, right? And I think we're fortunate that the Jito team has just been such great stewards of the block building process, and they did, like Mike mentioned, shut down their mempool product when they saw that was harming the network, and that just goes to speak to the team and who they are, that they did that. However, I think having competition means that you're not relying on people to act in a certain way. You're letting the market speak, and the market can determine what it wants. So in the case of this specific competition, you can have wallets say, I will only send transactions to validators who are using this block builder versus the other, because I know that, block builder 1 delivers a better experience for my customers than block builder 2. You can see users start to demand something like that, especially the more sophisticated ones. The retail guy who submitted one transaction a week or something probably is not going to do that. But if you're a sophisticated trader, let's say you have a prop AMM that you've deployed, maybe the updates to prop AMM, you go through one of the systems and not the other, because you think that is better for you. And now you have more choice in the matter. And I think that choice is quite valuable.
Okay.
I'll also say it's just harder to solve this problem in an open permissionless environment. And I know that Solana gets compared a lot to Hyperliquid here. This is an easier problem to solve if you have a team, right? And you can unanimously make a bunch of these decisions. But I would push back a little bit on comparing Hyperliquid directly to Solana, because again, if you have a closed system with a team that's making all these decisions unilaterally, I think it is easier to, you have a lot of tools in your toolkit that you don't in an open and permissionless system. But I also think you get some benefits for solving this, like having an open system where you solve these problems. So I think that gets lost in these discussions sometimes.
All right. So earlier we alluded to what was happening with prop AMMs on Solana, which is really interesting. Basically, this whole DEX space on Solana has been maturing, and we're seeing prop AMMs like Humidify, Tessera focus on really highly liquid assets like Sol stablecoin or stable to stable pairs. And, kind of the longer standing AMMs that are more passive are actually more now capturing just long tail assets. So talk a little bit about, how this market is developing and how this is affecting the relationship between kind of the interplay, I would say, between DEXs and centralized crypto platforms, and what you think this means for how Solana DeFi is evolving and maturing.
I could take a first run at this, which is, to me, the reason why prop AMMs are really interesting is what they've enabled. And one thing that I think gets lost in the discussion around, I do, by the way, I think it was a little bit of a, we would have loved to see as a Solana bull, like them owning, or that chain owning the dominant venue for perps trading on chain. So I think it was a little bit of a fumble to not get that. But I think there's hope and there's a light at the end of the tunnel for winning that use case back. But I think, there's been a very long-standing debate in between central limit order books and AMMs in crypto. And AMMs have always been really good for providing liquidity on kind of the long tail of assets, but they really struggle because especially the early designs just weren't very capital efficient. And kind of why should retail just be able to passively market make, which is a very high skill activity, and be profitable? So to me, the active, the prop AMMs were really interesting innovation because it's an interesting blend of some of the trade-offs in between more passive AMMs and central limit order books, which didn't really work super well on chain. But basically the difference being that AMMs, they keep some of the like pricing logic and inventory management and things like that opaque and tightly controlled by the teams that are managing them. And then they integrate directly with aggregators and do more active things, like they pull real-time oracles and they can update quotes more frequently and things like that. And no one like to the point earlier that I made about we don't need to rely on centrally coordinated tech innovations. This happened just independently, right? These were entrepreneurial teams who just discovered this opportunity within the microstructure. And what it led to is Solana is kind of the only ecosystem that actually has deeper liquidity and tighter spreads for the sole USDC pair than you'd find on centralized exchanges. So all of the ingredients are there for Solana if they continue to lean into this innovation. And I think, you're going to start to see teams experiment with the this same style on the perps side of things as well. And I would expect there's some great teams working on this, so I would expect to see a real movement on perps on Solana here too. But that's why I just think it's a cool innovation that some entrepreneurs just looked at it and it's like, hey, we could be doing things differently.
Yeah, I agree with all of that, and I just want to explain at a very basic level, like, why are prop AMMs interesting or exciting? I think a lot of people have heard about it and may not fully understand, like, why is this valuable? So historically, what we've seen are two different types of trading venues. We have exchanges that have a central limit order book. That's the thing that you're most used to. That's the Coinbase, or you see that on all these centralized exchanges. And the positives to that are obvious. You can be very specific about the price. You can run your own algorithm if you're a market maker, and you have this very deterministic execution. And then AMMs were exciting because they allowed anyone to deploy liquidity, and they just enabled that long tail of assets to be liquid. You did not need to have that same level of sophistication. I think prop AMMs find a really interesting middle point. And the thing that's exciting that's in the middle here is prop AMMs allow for much more capital efficiency than old school AMMs because of two things. One, they can update what their logic is at any time. They can change how much liquidity they are providing to the market based on the market conditions at that exact moment. They don't have to sit there and absorb a bunch of bad flows and be adversely selected against, unlike other types of AMMs. They are also able to concentrate liquidity because they're not telling you exactly where the liquidity is. It's opaque. You don't know how much could I sell to this prop AMM at this price. I don't actually know. I can just keep going until they don't want to quote anymore. But I can't tell a priori before executing that, if I sell $1 million worth of X into this pool, I'm going to affect the price. And that's useful because it makes the system less manipulable. It makes it way harder for predatory traders to go and hunt people's stops. It makes it a lot safer, actually, when there is this opaqueness to the maker side of the order book. But prop AMMs benefit against central limit order books in that they're far more compute efficient. You can deploy the prop AMM on chain, and then you are actually allowing the router to go and simulate against it, and then you are causing the user who wants to trade to pay the compute cost to update the state of the prop AMM. So instead of you as a maker needing to be constantly updating your order book, you are actually offloading some of that expense of doing that to the customer. So you only update the order book when someone's about to trade. And that means that you can just process way more transactions way more effective transactions, because you don't end up with all these like, I place the order, I cancel the order. I place the order, I cancel the order. I place the order, I cancel the order. You don't need that clogging up the block space with this. So I think there's a lot to be explored here. And, what gets me really excited as an investor, just like at a very high level, is seeing this type of experimentation. And I think Solana is very much at the forefront of this experimentation. There's nowhere else that you see experimentation at this scale or at this speed.
Yeah, one thing that was mentioned in the Blockworks research report that I read about this is that they talked about how on Ethereum, there tend to be more category winners that just dominate for long periods. And in Solana, there's just a lot more competition, and, there isn't just always one dominant player in a space. And I was just curious, like, why do you think that is?
I think it's culture. Solana has this deep-seated culture of competition. Right? You can see that when you talk to a lot of the people in the Solana ecosystem. They see competition as a net good thing. And look, I'm very close with the Solana ecosystem. I'm less close with the Ethereum ecosystem. But my perception on the Ethereum side is much more coordination than competition. And I think that's a fundamental difference. But Mike, I would love to hear what you think about this.
I was going to say, I think there's a path dependence element to this too. I mean, Uniswap started so early. They pioneered the category. And then by the time they got critical mass, I think it became pretty clear that trading wasn't going to happen on ETH main chain. So actually, you can kind of understand, okay, there's this massive competitor here that I'm never going to unseat. And by the way, the prize might be shrinking anyway. So most of the competition for great DEX designers just moved off of ETH main chain, I would guess. I also would say, like, one thing too that's really interesting about these prop AMMs is that what Tushar was saying on the first point that you mentioned there about more passive AMMs being leaky is that there's a concept called lever or loss versus rebalancing, which is it's what AMM designers are really obsessed in the Ethereum ecosystem on, which is there is essentially a loss that you take as an LP where true price, there's a big lag in price discovery that happens on chain. So assume that the true price discovery for like ETH USDC is happening on Binance. And then you have to wait 12 seconds before you can update that on chain. And it's very expensive. You're essentially paying arbitrageurs a lot of money to do that. So the other thing that's interesting about the prop AMMs is that a lot of the Sex to DEX arbitrage flows, which were big money earners for the beavers of the world, that's actually moving on chain on Solana, which is really cool because at one point, there's a point just a couple of years ago, I did a long podcast with Dan Robinson actually on DEX design. And the question was, how are we ever going to get price discovery on chain? No one was particularly bullish about getting price discovery on chain, but it is happening on Solana. Not entirely widespread, but I think the prop AMMs are, they're a step in the right direction. And I would agree with Tushar too, that it's just encouraging to see that type of experimentation.
Yeah, to Shar's point about how Ethereum has more coordination, I'm pretty sure one time on the chopping block, Haseeb said something about Ethereum being kumbaya. So that's kind of to the coordination aspect. Okay, let's be sure to talk about the AI agent thing, because obviously that is just wildly hot right now. And, we saw obviously with this whole Alpenglow phenomenon, just how well crypto and AI kind of fit together, or just kind of how naturally these agents, figured out how they can transact. But the top chain where we are seeing agentic activity is Base. Coinbase did develop this X402 protocol. I don't know how much that helped, or the fact that Virtuals was already on Base. But we're seeing OpenAI now has its own agent payment protocol, which works with Stripe. Google launched a P2, which works with 60 plus financial partners, some of which are MasterCard and PayPal. And Solana itself is also seeing a fair amount of agentic activity. It has this MCP, which is to help enable AI agents to interact with the Solana blockchain. But obviously, as I just talked about, this is such a competitive space. It feels like everybody is just trying to move into it. So, what do you think are the best ways that Solana can compete?
Tushar, you want to take this first?
Yeah, I'm happy to. So the question is, how can Solana compete on exactly what? Sorry, Laura. I want to make sure I answer.
Just garnering a bigger share of agentic activity.
Oh, I don't know that you need to target that. Agents are going to be really smart. They're already really smart, and they're going to be even smarter over time. And they're going to look to use the chain that allows them to do what they want to do at the lowest possible cost. These are literally optimization machines, right? Their job is to go and optimize. They are going to, one, deeply understand the technical trade-offs of these different systems. I think they're going to understand the costs of using these different systems at a level that only the most sophisticated trading firms in the world today can understand. I don't think you can build for agents specifically. I think you just have to build the best protocol in the first place, and the agents will use the best, most scalable, cheapest, fastest protocol. I don't think that there's anything that's agent specific. If anything at all, all of crypto was built for AI agents. Right? This is a technology that was built effectively for AI agents, where you can just own a private key and sign transactions and broadcast that out in the world, and there's no intermediary and all these things that we appreciate about crypto as early adopters and as humans. AI needs that even more, right? AI can't open a bank account. It can't do a lot of things that humans take for granted. There's no KYC that an AI can pass. And crypto is the rails for that. So I think we're already there. And I don't think that there's anything else specific that an ecosystem needs to do to compete for agentic payment flow.
Interesting. Mike?
I don't actually have that much more to add than what Tushar said. I agree.
But do you agree that it's not necessarily an area that the community has to prioritize to try to get that activity?
I guess this is the question that every entrepreneur has to get comfortable with, which is how smart are these agents going to get? I don't think that they can do it today. I think there are, especially in Ethereum, there are real challenges around the agent's going to do exactly what you have to do, right? So think about the last time you had to bridge and manage gas costs and things like that. That is something that I don't think agents can quite do yet today. And there's some tricks around permissioning and security and things like that. But I think these things are going to get really, really smart, really, really fast. So yeah, I tend to agree with Tushar. I think the best thing that you can do if you want agents to use your chain is to put useful things on your chain for the agents to want to do.
But why don't we talk a little bit about what Solana has been known for quite a while, which is meme coins. We're seeing, Pump Fun has trading volume that is still somewhat healthy. Obviously, it's not anywhere near where it was in late 2024 or early 2025, but I would say it's still going strong. Pump recently crossed into $1 billion in revenue, but as I'm sure you're very well aware, this type of platform has engendered a lot of criticism, and yet at the same time, clearly they are succeeding in some regards. So what do you think is the future of it can, and it can be meme coins as we've known them, or just anything that you think is a similar type of activity on Solana.
I can take a first stab at this. I think meme coins are an instantiation of a broader trend and a broader thesis that we have, which we call entertainment finance. And what we are seeing is there's this cultural phenomena. This is very much in the zeitgeist, broad base. We're seeing this across many different demographics, where people are trading for fun, not just for profit. An example of this is sports betting. A lot of those sports bettors know that they're not making money, but they still enjoy it. And they still want to do it because, you know what? It's fun. And people are willing to pay money to do something that's fun, right? Like think about all of the other things that people do for amusement that cost money. And I think trading has become one of those things. And this is just like a mega trend, where you're going to see more and more entertainment finance out there, whether that's prediction markets or sports betting or meme coins or NFTs. Like you're going to see a lot more of that type of activity. So I think that's here to stay. I think that's a part of the cultural zeitgeist. I think that it's just, it's especially something that the younger generations are attracted to. And I don't see that going away. A lot of the criticisms that I see are, from people who don't participate in it. But like, the comment that I would have for the people who criticize this stuff is you have to try to deeply empathize with the users who are like enjoying this and ask like, why, right? Like those are real people who are also like making that active decision to trade meme coins or to sports bet or to trade on prediction markets. Like they're actively trying to do that. So like, meet the user where they are rather than telling them what they should like or shouldn't like.
And actually, one quick question, because obviously Zora, which has been widely known to be a base app or that's how, it was known for a while. It, recently decided to launch its new attention markets on Solana. And I wondered, why do you think, from their perspective, what is it that you think kind of led them to this decision?
I think to the point I think I was trying to make at the top of this episode is brand is powerful. To make a semi-serious observation, but I think it's somewhat true and at least a little bit ironic to me, is that, the Ethereum Foundation and Vitalik specifically has been criticized for not being very supportive of DeFi, where Ethereum kind of had its core use case and early lead. And despite wanting all of these Farcaster type apps and consumer apps and social apps, none of that really worked. And it all kind of collapsed back on DeFi. And now they're, thinking about things differently. And I think Solana actually won some of that use case. Like they are kind of the place and the brand where I also will say for Pump's still doing 50 million in revenue a month. I mean, it's still a juggernaut in terms of what it's generating on fees. I'm not super bullish on the market for memes here necessarily specifically, but what I do think is when the next crazy entrepreneur has some exchange or trading related idea, they're going to do it on Solana. And that's why I think it's a powerful proof point that you've seen Zora make that move to Solana. Now, conversely, it's been a little bit harder to gain some traction on the real world asset side of things, although Camino is doing quite well there at the moment. So,
yeah.
But I think it's branding. It's just like, put yourself in the shoes of the entrepreneur. I think that we tend to way overcomplicate this stuff. And, if you've got some new trading app, new idea, form factor you want to try, you're like, well, everyone's doing that on this chain. I'm going to go on this chain. I think that it's usually simpler than we give it credit for.
Yeah. That is one thing that I was looking at before this show, which is just, it sort of feels like the way that this is working out is, Solana is kind of picking up more retail and Ethereum is becoming home to institutions. So, I'm curious because obviously, because Solana has long aimed to be the NASDAQ of crypto, what do you think will finally bring them? And when we look at kind of what's happening, it's sort of like Ethereum is, able to tout that it's had this 10.5 year, 10.5 year uptime. And Solana appears to have addressed the outage issue, but, I guess it's sort of like the Lindy effect thing where you need to see it play out a little bit longer for confidence to keep building. But when it comes to RWAs, we have about $15 billion worth of RWAs on Ethereum, and all of this is largely stable coins on pretty much any chain. BNB is at 2.3 billion, Solana is at 1.7 billion. So I'm just curious, what do you think will increase confidence amongst institutions and really move the needle for Solana to grow its share of the RWA pie?
So I can start out on this. I don't think the current numbers matter at all. They're just so small. It's like saying, there's 1 cent here and 3 cents there, and who's going to win? It's just like these things round to zero. And they're very, very concentrated in things like tokenized gold or other very specific assets. So it's just we're absolutely so early to RWA issuance on chain that looking at it now, I think doesn't make sense. I think what matters is what the new class of issuers are going. I think there's going to be a whole new class of issuers who comes into the industry post Clarity Act. We just haven't seen them yet. They need the regulatory approval to even consider deploying somewhere and building somewhere and issuing assets somewhere. And they're not going to do preemptive work on that until they have that clarity. Now, fortunately, I think we're going to see that under this administration, and I'm optimistic about the regulatory side of things. I think that'll invite these institutions to come build. And I think that the features that they're going to want, a lot of them exist on Solana. The things that exist on Solana are things like token extensions that allow you to control who can interact with your asset or protocol if you need to. The things that exist on Solana are things like prop AML, which allow you to efficiently provide liquidity on those RWAs. The things that exist there are, a deep set of builders who are going to compose with your assets and create, net new interesting things. There's many advantages there that I think are there for Solana on RWA issuance, and I don't look at the past or the present for this because I think all of the growth is in the future.
Mike?
Yep. I agree with all of that. Just for the sake of not getting complacent, I think that all of the growth still has to happen in the future, but when new issuers look to decide where they're going to deploy, they'll probably look at two things. They'll look at the tech, and then they'll also look at where there's traction. And the go-to-market for, maybe there's an analog here of the go-to-market for DeFi has been, well, I try to go and scrape up enough crypto native activity that I can then go to institutions and say, hey, look, I've got users, liquidity, people using my product, and it's kind of the selling point. So I agree with Tushar that all the growth is in the future. I do think it's not a totally irrelevant data point where there's activity today. So it's growing on Solana very actively. And I think that it's too early, right? No one has won anything fully yet, with probably the exception of Bitcoin being digital gold. I think that's just firmly won. But I think most of the rest of this stuff, I tend to think, is up for grabs. And one huge deal, one huge integration on the Solana side of things, maybe via Camino, right? That makes it massive. Yeah, you can completely leapfrog the competition here. So I agree. I totally agree with Tushar. It's very early. And that's why I started this by saying, I think it's really a BD and marketing game right now. And we're at a moment in time. And that's where I'd be directing, the vast majority of my efforts.
Okay, last question. I started by talking about price, and I know that it's like if you're here for the long term, it's maybe not always the most fun thing that people want to focus on, but it's something people care about. And Tushar, I know that you have been looking at the tokenomics for Sol, and I think the last time you were on the show was after the failure of SIMD 228. Which was an attempt to make the token less inflationary. And I just wondered if you would talk a little bit about what changes in the tokenomics you'd like to see, or just generally what prospects you saw for the price. Like I did see that a lot of the unlocks are done with, so I think like obviously that is positive. But yeah, tell me where you think the price will go, or what will be the catalyst for it.
Predicting price on a short time horizon is almost possible.
Yeah, I didn't mean to phrase it like that.
So, I don't know. I can tell you that the fear and greed index is very deeply in fear territory. And I can tell you that all of the same things that sounded so smart and so interesting and powerful at the top of the bull market in 25 or 21 around DeFi, around composability, around permissionless innovation, all those things are just as exciting now. The ideas don't become less exciting because of the price. I think what you need to look at is, at this point in the cycle, I try to think about what has changed and what hasn't changed. So let's start with what hasn't changed. Human nature has not changed. This is a volatile asset class with a lot of reflexivity in the price. The price leads sentiment in a lot of ways. So you'll see people, buy because it's going up or sell because it's going down, not because they're actually thinking about, what does this thing do and how useful is it? And human nature has not changed. What has changed, though, when compared to past bear markets, is in past bear markets, I don't know about you, but like I had some like deep fear of, hey, is the industry going to make it? All right, like is there going to be an industry? And now today, I don't have that fear at all. There's 0% chance in my mind that the industry's gone, and that I think is just such a huge change, right? Like the legitimacy that the industry has gotten, the regulatory adoption and clarity that we're getting. You have the biggest asset managers in the world and the biggest exchanges in the world all saying that they're exploring blockchains and tokenization. And that has completely changed. So overall, like I think we're in a bear market. I don't think the industry is going to die. And so I'm very optimistic about the future here. And I'm optimistic specifically on, like where these prices are going to go over the long run. Which is, why I'm betting my career on it. Like, that's why I'm here is, I think that this industry is going to do extremely well, change finance forever, and it's going to be the substrate for finance globally.
But just quickly, are you going to try to revive some kind of proposal to change the tokenomics for Sol?
I haven't made a decision on that yet. Right now, what I'm working on Solana governance is I proposed this thing called the Solana Constitution at Breakpoint in December in Abu Dhabi. And the Solana Constitution outlines how these straw polls should go. So that way, next time we have a governance debate out there in the community, we're not debating about the meta parameters of, did we discuss this for long enough? Who should vote? How should voting happen? Let's codify that so then we can focus on the actual issues. I do want to be clear, though, that the Solana Constitution I proposed is just at the soft governance layer. This is a framework for conversations and discussion and people to align. Hard governance is a separate thing and is what code do you choose to run and which validators do you choose to stake to? And so that is going to stay exactly the way that it is. I don't think anything can really change hard governance, but I do think having a more efficient soft governance layer for conversations related to governance is going to be really helpful. And once that exists, I do have several ideas that I'm excited about for Solana staking. I think, Obviously, I think inflation rate is too high. I continue to believe that. I think that there is something really exciting about long-term staking. I think that we should reward people who lock up their tokens for a longer period more than we reward people who lock up their tokens for a shorter period. Very simple concept. I don't think it made sense to explore that in the Solana of 2 years ago because there were too many other things to solve. You need to solve scalability. You need to solve reliability. There were a lot of core technical problems. But now that appears to be at a very stable place, we don't have scalability constraints really on the chain today. I think that the room to experiment with things like long-term staking and a dynamic inflation rate has now opened up. So I am excited to continue exploring that.
Okay, Mike, and what about you? What are you looking at in terms of catalyst for the sell price?
I don't know about Sol specifically, but I can give you my mental model for crypto at the minute, which is I think that we're in an air gap, actually, which is simultaneously the result of good news. Actually, ironically, something I think is weighing on the price a little bit is that it's a long-term bullish catalyst, but we're going to have regulation via Genius and Clarity. And I think what that means is the previous game of moving tons of speculative capital into the space and no one really caring about fundamentals or doing much sophisticated work in terms of valuation, because you literally legally couldn't redirect any value back to token holders. I think that now that there's an option to do that, that is going to be the dominant way that people value different types of tokens. And that means the valuations have to reset. At the same time, I don't think that crypto delivered on some of its lofty promises over the last 3 years. And at the same time, we haven't delivered. AI is sucking all of the air out of the room. So I think that is what's caused it. There hasn't been, I think people have been a little bit confused. One, because myself included, this 4-year cycle doesn't really make sense anymore. We haven't had one catalyst that we can point to and blame FTX blowing up. But I think there is a confluence of factors, and I think that's why we're entering this next bear market. I think what is going to happen coming out of this is that the same thing that happens in every bear market. There's going to be consolidation. There are going to be stronger competitors that emerge. But I do think that the industry is going to fundamentally change after this. I think there will be more rational ways of valuing these things. I think the industry is going to grow up. And I think Solana is poised to do really well in that world. And just one thing that I would end on, maybe what I started on here, is I am looking at assets or categories where there are a couple of winners with high barriers to entry. To me, that's what borrow lend protocols look like. That's what exchanges look like. And that's what L1s look like. I think the barrier to entry to being a new, successful, credibly neutral L1, it's kind of like real estate. They're not making them anymore. So I think they're really valuable. I think they can generate a lot of fees. I have no crystal ball on an 8-month or 18-month time horizon, but I do think over a long period of time, Sol's a special asset.
All right. Well, thank you both so much for doing this show and also for staying a little bit over time. It was, so great hearing all your thoughts. And I'm excited to see, all these different tech developments and also kind of how the competition plays out. So, thanks for joining.
Thanks. Thank you, Laura. Thanks, Mike. Good to see you.
And thanks everyone for joining this live stream. We'll catch you tomorrow.